Welcome to the basement. Welcome to the live stream. You are a silver and gold investor. We have big stories to talk about today that are going to have major impact on the value of your silver and gold. We actually have even a newer development on this story regarding the Federal Reserve and the FDIC and the derivatives, a big story that came out on Friday, but a new wrinkle, a new twist in that story that we'll cover. But first, basement dwellers, let's talk about something that I think will make you feel warm and fuzzy. How does the prospect of gold 10 times higher than where it is right now, $27,000? How does that sound to you? Let's go to our friend Jim Rickards and see what he has to say about that, because he has some very interesting insights. Who is James Rickards, you may be asking? Well, I think he worked in the Reagan administration. He worked for a lot of the intelligence communities. He's worked for the Department of Defense. This guy is for real, and he's talking about $27,000 gold. Now, I want you to imagine, maybe you don't own gold, right? I'm more of a physical silver guy myself, but I want you to imagine, what would the silver price be if we had $27,000 gold? I would imagine at least 10 times higher than where we are now, which would be north of $30. Come on, Ron, add a zero to that. $300 per ounce. But why is he saying $27,000 gold? This is not some crackpot, right, sitting in his mom's basement or anything like that. James Rickards is a highly respected analyst. He says, I previously said that gold could reach 15,000 by 2026. My latest forecast may actually exceed $27,000 per ounce. I don't say that to get attention or to shock people. It's not a guess. It's the result of rigorous analysis. Of course, there's no guarantee that it'll happen, but this forecast is based on the best available tools and models that have proved accurate in many other contexts. Okay, so this is not something he just came up with out of the blue. The tools and analysis that he used to come up with $27,000 gold are the same tools and analysis that have been used in other scenarios and have proved themselves accurate. What he says, the analysis begins with a simple question. What's the implied non-deflationary price of gold under a new gold standard? We're talking about a gold standard. No central banker in the world wants a gold standard, right? They have no interest in any form of money they can't control. Still, what if they have no choice? And guys, we've talked about this before here. I believe this in my soul to be the truth. Do you believe it? Do you think that the world could be forced, like it has many times throughout history, forced back onto the gold standard, right? That gold and silver never go away as the base of the entire world financial system. We know Exter's pyramid that was developed by a former employee of the New York Federal Reserve shows it very clearly. Everything rests upon gold and silver. So, what if they have no choice, right? What if gold, how do I say it? It's like gold and silver being the real forms of money are, and denying that is like denying that gravity doesn't exist, right? You can fight gravity, right? You can go off the gold and silver standard for a little while. You can fight gravity for a little while. You can jump in the air. You can put an airplane up in the air. But if you remain within the atmosphere of planet Earth, eventually gravity wins out, just like gold and silver will eventually win out. What if confidence in command currencies collapse due to some combination of excessive money creation, check, competition from Bitcoin, check, extreme levels of dollar debt, check, a new financial crisis, war, or natural disaster? In that case, central bankers may return to gold, not because they want to, but because they must, in order to restore order to the global monetary system. Does this explain why central banks are buying gold hand over fist right now? I know the PBOC, The People's Bank of China, oh, they stopped buying gold in the month of May. They didn't sell any gold, guys. They just paused. And a lot of people are saying it so that they could let the other central banks and the growing BRICS community acquire more gold for themselves at a lower rate. What's the proper gold price? Here we go. The scenario begs the question, what's the new dollar price of gold in a system in which dollars are freely exchangeable for gold at a fixed price? If we go down here, there's a lot of technical stuff in there about what's happened in the past, proving his point. It says the goal would be to maintain the dollar price of gold in a narrow range around the fixed price. What price is just right? That question's easy to answer. $27,533 per ounce for gold. He calculates that by the U.S. M1 money supply, which is a good proxy for everyday money. That's like all the cash out there, everything else. M1 is the supply that is most liquid and the money that is easiest to turn into cash. And if you apply the almost 18 trillion in money supply and back it with a 40% ratio, that's $7.2 trillion worth of gold is required. If you divide that by the 261 million ounces of gold that we supposedly have here in the United States, you come to 27,533. He says there's room for debate about whether the 40% backing is too high or still low. The price of gold could actually be higher if they decided to back it by 50% gold. But guys, this is where we very well could be heading. Okay, does it make sense? I mean, if you think about everything going on, like Rickards talked about, and again, he's no crackpot. He's no guy out there just trying to get clicks on a video or anything like that. What he's talking about is the true natural order of the planet, where gold and silver are the only forms of real money, and that's been the case for thousands and thousands of years. What about if you want to talk about silver now for a second? I got some news for you on silver. Mainstream media talking about silver? What does that mean, right? Guys, the silver market is so delicate right now. It's a delicate little flower, okay? It takes very little to knock the silver market out of whack. Do you remember what happened, a year and 3 months ago during that little banking crisis? And we'll be talking more about that later. And we got a lot to talk about, big stories about silver and gold. Okay, big stories. But remember the banking crisis. You couldn't get silver. You couldn't go to your LCS local coin shop and buy silver. I went to mine and the cupboards were bare. They said, well, it might be 6 or 7 weeks, but we're not sure. So it doesn't take a lot. If the mainstream catches on to what's going on, right? And when they do, and are they? Let's listen to what CBS has to say. And we'll run through this one quickly because you probably know most of this already, but I found it very interesting that of all news outlets, CBS News, let me get to the very top. I need to prove. There it is right there. CBS News, CBS, Central, whatever, broadcasting system is saying 5 reasons to invest in silver bars and coins right now. Here's their 5 reasons. It's review day here in the basement. This will give you the warm and fuzzy about your silver, okay? It says, while gold takes center stage historically in terms of precious metals, silver can also offer a unique value proposition. That's because, like gold, silver has long been a hedge against economic turmoil. And there are other good reasons to consider adding it to your portfolio today. Here we go. Numero uno, there's a limited supply of silver. With few primary silver mines in operation and shrinking, the supply cannot easily ramp up to meet potential spikes in demand. This is critical for you if you're in, and this is true for gold too, but for silver, this supply inelasticity could amplify future silver price increases if demand outpaces available supply. You gotta remember, right? This is a good thing for you if you are a silver investor. The silver, you cannot, when the price of silver skyrockets, There's no like button they can push out there to produce more silver. Maybe just a tiny, itsy bitsy, teeny weeny additional amount could immediately be produced. But it's not like there's like all these big silver mines just waiting for the price of silver to skyrocket so they can press the big green button, turn on the mine, and start producing, you know, millions of ounces of silver at the drop of a hat. No, the inverse of that is true. Right now, there's no new silver being found. There's no new silver mines being built. You know, very few. The amount of silver, and then we'll leave it at this. Think about this, guys. The amount of silver being produced every year right now, even with a $30 silver price, is going down. What does that tell you? Huh? That when the price does skyrocket, okay, and there's no new supply that's going to be available, it could get super, super interesting. Number two, increasing industrial demand. Clean energy initiatives accelerate. All right, you know that. We know that whole story. They're only using hundreds of millions of ounces of silver in solar panels. Electric cars, we talked about yesterday, China is now producing more cars than the United States, and I think half of them are electric. And we know, I've heard people say, I don't want to, and this is not a, don't take this one to the bank, but I thought I heard somebody say like a kilogram almost of silver in a lot of these electric cars. Silver is a hedge against inflation. In times economic turmoil, high inflation, investors often flock to hard assets like precious metals to preserve wealth. That's because silver and gold have intrinsic value beyond the fiat currencies and cannot be inflated by central bank policies. Their limited supply also helps protect them against debasement. Yes, there's no way to print silver. We've tried and tried. The gold to silver ratio is high. Right now, it's sitting right around high 70s. The gold to silver ratio has a long-term historical average in the 50s. Guys, here's the deal, okay? And if you look at a chart, a long-term chart of the gold to silver ratio, it is indeed closer to the 50s on average. If we had a gold to silver ratio right now of 50, the price of silver would be $46 per ounce. So a ratio as high as it is right now could be a sign that it's the right time to buy in an opportune price. And we don't ever talk about this one. I'll give CBS some news, some credit for this. Silver can be used for portfolio diversification. Yes, right? If you got a bunch of stocks, you got a bunch of real estate, you got a bunch of other stuff, excuse me. Having some money in silver can absolutely help diversify your portfolio. What about if one of the world's more famous, infamous, right? I don't know if it's a hedge fund, investment fund. We'll call it an investment fund. Muddy Waters. Have you heard of Muddy Waters? Right? They usually short stocks. They're an activist investor type company. They'll go in and they'll say, this company's overvalued. It's got to go down. Very interesting. Would you find it interesting if that same investment fund that had almost exclusively in the past only been one that would try to tear companies down and short companies suddenly now has an interest in going long in investing in metals? I find this is one of those stories that nobody else in this sector is really talking about right now, but I found this to be very interesting. You know, one of those ideas that that you have to kind of be able to connect the dots to understand. Carson Block raises money to bet. Oh, okay. Thank you, Susie. I'm going to get back to the super chat here in a second to raise money. Let me start over. Carson Block raises money to bet on a rising metals and mining stocks. Okay. They're betting on raising metal prices and mining stocks. Carson Block, who made his name betting against companies, is gathering money for a fund that will bet on rising metals and mining stocks. This came from, I believe, Bloomberg. Okay. Bloomberg talking about metals. Yahoo Finance talking about metals. CBS News talking about metals. Soon, coming to a neighborhood near you, your neighbors asking you about metals because you're that gold and silver guy in the neighborhood. And everybody, Susie and I last night, the girls spent the night at a friend's house and we had about a half hour to watch TV. We were watching that Gold Rush with Parker Schnabel show on TV. And I was watching that and I'm like, this is a really popular show. It's like, I know that like hardly any Americans aren't necessarily running out and investing in gold and silver, but I'm like, this is proof to me. Gold Rush, Alaska, or Parker's Trail, whatever it was called. It's all about gold mining. And I thought this is proof that actually Americans do know, or there's at least a base level of knowledge and interest in gold. In the future, right? That I'm telling you guys, it could be a wave of people. But let me get back to this. Muddy Waters Resource Fund filed a private placement notice Tuesday with the SEC indicating the vehicle bought about $1.5 million. Muddy Waters Capital, based in Austin, Texas, is best known for making bearish bets and openly sparring with corporate managers. But with stock market reaching record heights, some short sellers are exploring alternate strategies. And what's their alternate strategy that they're exploring? Metals, mining, rising prices in silver and gold. Muddy Waters is the smartest guy in the room. Okay. These are people that look for undervalued opportunities. And when they're looking at the metal sector, what they're seeing is undervalued opportunities. This is good news for us as silver because we're already there. Remember, I want to point something out very, very important to you. Okay, hold on. Hello, Metal Seer. Thank you for the super chat. I've always. Okay, thank you, Susie. You're early. You're early to the party. Okay, there's going to be a massive show. Think of it that way. The silver and gold, the precious metal mining stock show at the local theater, right? There's like 3,000 seats in the theater. You and me, hey baby, we're going to the show. But we're those type of people. We want to get there early and we want to get the best seat. And that's just what we did. Show doesn't start till 7:30, but we showed up at 6:00. And when they opened the door, we got in there and got the best seats. That's just like you right now. Do you feel that way? With the silver you've purchased, with the gold you've purchased, right? You bought it early with the precious metal mining stocks. If this plays out like we're anticipating, guys, it's going to be a sold out show. But we're sitting in the front row, us basement dwellers, huh? We already got our popcorn, our soda. We're listening to the music. Right? Sometimes it's a little painful. Our backs hurt a little bit, right? We get days like Friday when the silver price was clobbered by $1 for no reason. Oh man, let's talk about that real quickly. This is one of those critical things that you need to understand if you're going to invest in silver and gold. Okay. They manipulate the price, right? And think about what happened Friday. Nobody knows why. I mean, usually they can say, well, the dollar went up or the interest rates went up or such and such, bad economic, good economic, BS news is what they'll blame it on. Nobody could even, I think they were exasperated, exasperated. Anyway, you know what I'm saying? Nobody could say why silver got clobbered on Friday. It makes no sense. That's a sign. Crazy volatility. That's an absolute sign, right? That this system, it is so delicate. Gold market, the physical gold market, right? Because of all the manipulation, but in particular, the silver market is so sensitive, so delicate, so thin, right? So leveraged. And when we're seeing these crazy volatile moves, I know, right? Like it's painful. My back hurts. Does your back hurt? My back hurts. I'm 54 years old. I've been at this 20 years. But guys, that's a sign that this system could be coming to an end, right? And that what I'm talking about is the paper manipulated price of silver and gold. When we've got these crazy movements that don't make any sense, they make no sense, right? Fridays. 3 out of the last, do you know this? This is crazy. In 3 out of the last 4 Fridays, okay, we've had massive downturns in the silver price. And if you add the amount of per ounce that silver went down on 3 of the last 4 Fridays, it's over $4 an ounce. Okay. It's insane. It doesn't make any sense. But you know what? That's actually good, because we know the fundamentals are there, and that could be a sign, right? If a system that's been manipulated for 40 or 50 years, and it is going to break, it's not going to break in a peaceful, smooth way. We're going to have volatility like we've never seen. And I've been following silver closely for 20 years, and I'm feeling volatility, unexplained price movements, right? Like I've never seen. Do you feel that way? And does it make sense what I'm saying to you, that if this 40 or 50 year system that's been manipulated is indeed going to break down, that it's going to break down in a very violent manner? And I think that's likely what we're having right now, what we're experiencing right now. Let's go to Kitco. You ready for some bad news? Look, we're going to look at both sides of the equation, right? But we're going to go to Kitco and look at an article that warns us, maybe all this talk about green energy in silver is just a bunch of bunk. Is that what they're saying? We're going to go check that out. Thank you, Harold, for the super chat. You guys are being super duper generous this morning. Let's go take a quick look at the silver price. And let's say thank you to channel sponsor Pimbex, Pimbex. You guys know this is the company that I deal with when I buy silver and gold. One of my more recent purchases from them was this 2023 1 ounce Great Britain silver Britannia. Why did I buy the 2023? Because it's the first year with this character on it. Let me show you. Hold on here. Here we go. Him, King Charles III. And a lot of people don't like the coin. And so it's my understanding that they didn't sell a lot of these coins or make a lot of these coins. And it was like the first half of the year had the Queen on it, and the second half of the year had King Charles on it. I'm a contrarian. To me, that's a good thing. Number one, it's the first year that they made this coin with King Charles on it. Number two, the fact that everybody was like, oh, it's ugly and blah, blah, blah. Okay. I'm like, hey, that's great. That at some point, 20 years from now, people are going to be saying, oh, I want to get on the first year they put King Charles on the coin. I want that coin, right? I believe that this could become more valuable. All right. That's just my opinion. Don't make any decisions. Don't buy this coin because you'd say, oh, Ron says it's going to be more valuable in the future. What I really wanted to show you was this. Guys, do you know how lucky we are in this country? Look at this. Okay. If you buy 500 of these coins, you can get them for $32.10 each. Now look up here and look at the price of silver. Manipulated price of silver, $29.60. If my math is correct, that means you're paying $2.50 over spot. Do you know how lucky we are in the United States to be able to buy silver this cheaply? Number one, that price of silver, $29.60, we know that's phony. We know that's manipulated down. But number two, the premiums right now are so low, $2.50 over spot. If you lived in another country, Europe, for instance, you would likely, right, be paying, number one, higher premiums. Number two, on top of all that, a 20% value added tax. So to me, it's just unbelievable. And if you lived in China and you wanted to buy silver, right, on the Shanghai Gold Exchange, you'd be paying over that's their price, $34 per ounce. Okay, so we are living in an environment that is very conducive. Something else I wanted to point out about Pimbex up here in the upper right corner, just to the left of my arrow. Free shipping on orders that are $299 and higher. I've never talked about that before. But one of the things I love about when I get a package from Pimbex, not only do I get free shipping, and if it's below that, I think it's a $10, like a flat $10 charge. So pretty reasonable. But nonetheless, when I get packages from Pimbex, they're always wrapped up like Fort Knox. So if you want to get yourself your hands on some gold, silver, or platinum group metals, check out Pimbex. you'll get the best prices. You'll get great selection, and it's a company that you can trust. I'm not going to tell you what to do. I'm just saying, do yourself a favor, throw them into the mix next time you're out shopping for some silver, gold, or platinum group metals. And if you ever decide that you want to convert all or part of an IRA to precious metals, you can talk to them as well. You'll find they can also help you get more metal for your money with your IRA money as well. Let's go to this article from our old friend Niels. Guys, is it over for silver? Is this green energy revolution really starting to slow down? And will that result in lower demand for silver? Can silver prices sustain slowing momentum in the green energy transition? All right, Niels, let's see. Industrial demand increases from global green energy transition propelled silver to 12-year high last month as demand has outstripped supply. Yes. However, this trend appears to be at risk after the World Economic Forum, well, I'm sure we can trust those guys, noted that momentum in the green energy transition is slowing. In a report published Tuesday, the WEF said that while global energy transition is still progressing, growing geopolitical uncertainty has caused it to lose momentum. Well, growing geopolitical uncertainty also helps the price of precious metals, but I digress. The report used the Energy Transition Index. It probably comes from our Bureau of Labor and Statistics. Probably the same people that make up they take magic mushrooms and make up the employment and inflation numbers every month. I digress. To benchmark 120 countries on the performance of their energy transition. The report, in the current higher, basically this report came out and said that it looks like countries may be slowing down in their green energy transition efforts. The report also noted that global average ETI scores reached a record high this year, but the growth has slowed. So it reached a record high, but the growth has slowed. That doesn't necessarily, that means it's at record high and still growing, which to me would mean that there's still continued growth in the demand for silver. I'm just giving you my opinion. Silver has played a critical role in the green energy transition as it is essential to the production of photovoltaic solar panels. According to some reports, the average solar cell uses roughly 111 milligrams of silver. What I've heard is 20 grams, which is about 2/3 of an ounce. Due to thrifting, and thrifting, for those of you who don't know, and this is critical for us silver investors, because I'm telling you, every time you see a solar panel, you're looking at 2/3 of an ounce of silver. But thrifting is like the process that they use to replace the silver in there with other metals that are cheap. They're being thrifty, okay? The amount of silver used has declined sharply. However, analysts have said that this trend has run its course, so no more thrifting for you, and the amount of silver needed is unlikely to decline further. And we know that there's actually proof out there as well that the future generations from a technology perspective of photovoltaic cells are requiring even more silver. Kitco, we got news for you, Kitco News, right? The what are they, Topcon and some other, the newer, and there's another one even beyond that are requiring even more silver. Looking at the broader market, the solar power represents a massive component of the green energy transition. Investment in this sector now accounts for approximately 40% of global investment. Solar and nuclear are the future. I actually have a video coming out later today about solar and nuclear. Guys, the amount of electricity that the world is demanding, and it's all has to do with silver, okay, and uranium, in my opinion. But the world, because of two big things going on. The technology revolution. I mean, do you know that, like, if you go onto Google and do a Google search, that takes energy for that to be accomplished. If you go onto one of those AI sites like ChatGPT or Microsoft Copilot or any of them, and you do a artificial intelligence query or search, it takes 10 times as much energy. So we've got energy demands going through the roof because of technology, right, in the electrification, but also because we have more and more people, hundreds of millions of people every year and in the coming 5 to 10 years that are going to be joining the consumer class. They're going to be getting electricity in their home for the first time. People in parts of Africa, people in India, all over the world, and they want electricity, right? And a lot of that is going to come from solar, because think about this, and solar is silver. But think about this. If you live in a little house in a rural part of India, right, and you join the middle class, you join the consumer class, and you want electricity, do you think they're going to run electric wires all through the countryside to your house? No. They're going to say, hey, throw 4 solar panels on your roof. That'll generate electricity. It's the solar is the future because it's right there. It's immediate, and it doesn't require, it requires a fraction of the infrastructure, right? Do you think they're going to say, oh, we're going to build a bunch of windmills, 100 miles from you, and if it's windy, we're going to generate electricity, and then we're going to ship it 100 miles through copper and aluminum wires all the way to your house? Do you know how much money that costs? No. The future is solar, and solar doesn't work for now without silver. Yes, the big fear is that the solar industry is going to come up with some way to eliminate silver, but no one is talking about realistically about that happening anytime soon. Okay. 40% of global investment demand for silver is expected to continue to increase, with the Silver Institute estimating it could rise by as much as 170% by 2030. That is what's happening, guys. We got big. We're going to talk. Metals here. Global people overlook high energy cost of Bitcoin. Yeah, that's another thing as well, right? Cryptocurrencies, which are, I'm not anti-crypto. If you like crypto, good for you. I'm not a crypto guy, but the fact remains that the Bitcoin mining and all this mining, it takes a ton of electricity. Look at this baby. I love the Morgan dollar. Look at that. Isn't that just beautiful? Right? That eagle on the back. This took power. Probably not. This is from 1878, not electricity. Who knows what they used? Steam? I don't know what they were using back then. This used electricity to get our power, energy to get dug up out of the ground. Okay. But once that energy was spent, right, it's no more needs to be spent. All the value is stored right here in this metal. Okay. Guys, think about this. This will make you feel warm and fuzzy. How you're a metals person, aren't you? I am. I love the metals. Right? This does Bitcoin. No, look, I'm not anti-Bitcoin, whatever. But, number one, it does take a ton of energy to create it, right? Air, I don't know, whatever it is, a Bitcoin. I can't touch it. I can't feel it, but I digress. Okay. And then doesn't it take electricity and to transfer it, move it around and run all the stuff? I mean, that's great. Great. Good for you, Bitcoiners. I'm happy. It's in there, right? I'm going to tell you a story that really drove it home for me about metals, just metals in general. And then we're going to talk about a lot more. We're going to talk about this weird situation going on with the derivatives market, but a new wrinkle going on with that as well. But I was driving, I'll never forget. It was like 3 months ago. I was driving down Olive Boulevard here by my house. I was at a stoplight, and there was really old, like Chevy Suburban in front of me. And I thought, it's not going to be long, and that car is going to be in the junkyard, right? And look, I'm not a snooty guy. I drive, both our cars are 10 years old, a Honda and now a Toyota. But nonetheless, I'm looking at this old Suburban. I'm like, that thing's going to be in the junkyard soon. And then it hit me. And I thought they're going to crush it up, right? They're going to crush that sucker up. And what are they going to do with it? They're going to sell it for the only thing that it's worth anymore. And that's the metal that's in the old Suburban. I thought at the end of the day, that's what's worth is the metal, right? The car gets built. Everybody spends all their time putting all these parts and plastic together and all this crud to do with making a car and putting tires on, all that. And it has value. It provides transportation. But when it's done, the only real value that it has left, right after they strip off whatever parts they could continue to use, but this is true even for most of those parts, the only value is the metal, right? They're going to melt it down and they're going to use it in new products. Metal is real and it holds value, right? Over time. To me, that was just one of those little bit of a aha moment. Let's talk about financial. We got double whammy. Whoa, double. What do you think? Warm and fuzzy about your metal, right? Because it holds its value. But what do you think happens during financial crisis, during recession? I'll tell you what, gold usually goes up, 15 to 25% during a period of recession. Silver will do very well as well. If you heard about this thing, there's $100 million missing, right, from a banking app. Okay, let's talk about this briefly because this is interesting. Think about metal. Metals fixes this problem. Okay, this is from CNBC. Nearly 110 million. I was wrong there. Hold on. I'm going to get a quick drink of coffee. You have a quick drink of coffee with me as well. $110 million missing from fintech. That's like a financial, electronic tech company that's in finance. Yotta's customers' accounts vanished and Synapse collapsed, the bank says. So here's the deal. Okay, I'm going to make this real simple for you. Here, $110 million is missing. $110 million. Okay, so you got this app thing called Yotta, which I looked it up. It's like a banking type app, but it's also got like gambling involved in it. I mean, it's like, what is going on? So you got Yotta. Okay, I'm going to make it real easy. And then in the middle, you have this company called Synapse, which was like a, what do they call it? A fintech facilitator or something like that. And then you had a bank. So there's the crazy app, the middleman facilitator, and then a bank called Evolve Bank. The middleman, who's supposed to coordinate everything, the money disappeared. So now you got all these people that had their money in Yotta because they could do some kind of little gambling games with it or something. I don't know. To me, I looked at it for about 2 minutes. I'm like, this looks like a scam or whatever. Nonetheless, kind of like some of these online trading apps, whatever. It all falls apart, and there's $100 million missing. To me, what that drives home from a gold and silver perspective is I think I'd rather have my value stored in this, right? Those are three good old United States of America silver dollars. I don't know. It's just absolutely crazy. Let's talk about the Fed raising rates, lowering rates. Is the Fed going to cut rates? Look at this. And everybody says, oh, the Fed has to cut rates for the price of gold and silver to go up. That'll be the next big catalyst. Well, look at this from the Hill. It says the Fed must lower rates and upgrade flawed data to stay effective. So the Fed's getting all this pressure, right? Jerome Powell, chairman of the Federal Reserve Board, announced last week that the board has decided to keep the discount rate unchanged despite cooling inflation data, blah, blah, blah. This was a grave mistake that will perpetuate the depression in the housing sector. Those are some strong words, right? So we've got newspapers now putting out articles saying if the Fed doesn't lower rates soon, we're having a depression in the housing sector. Do you think we're having a depression in the housing sector? I don't know. Furthermore, the longer the Fed waits to cut rates, the faster and longer Powell will have to ease rates by this fall, which coincides with the presidential election that could make the Fed an unintentional, pivotal political factor. To obviate this argument, the Fed should start cutting rates in its upcoming July meeting. Guys, I got news for you. And let's just see, because Yeah, I think that's all I wanted. There's a bunch of excuse my language, a bunch of gobbledygook after that. Look, if you invest in silver and gold, it's real simple. The whole Fed rate situation is really just a bunch of noise, because I got news for you. The Fed doesn't, and I said this 4 or 5 months ago. I said I thought the Fed was not going to raise rates, and I'm not bragging, but I was right about that, right? And I still think there's a real good chance that the Fed may not lower rates. I'm sorry if I said that. Okay, sounds good. Hey, how about some thumbs up, guys? And then we'll ring that cowbell for 200 thumbs up. But I want to stay on this idea that, oh, the Fed's got to lower rates for the gold and silver price to go up. The Fed's got to cut rates when the Fed, and yes, if the Fed does cut rates, it will be very, very good for the silver and gold price. But, and it's a big but, and I know you like big buts like me. The big but is this, quite simply, the Fed, even if they don't lower rates, what we're going to see is inflation going higher and higher and higher. So think about this. If the Fed leaves rates where they are, and they know that inflation is going to even officially, even though it already is right now, but officially overtake the interest rate level, that's the same darn thing as them cutting rates, right? That's six or one half dozen the other. So does that make sense? Like if we have rates at 5%, and the inflation rate goes back up to 7 or 8%, well, that's the same thing as being at 5% rates right now with 3% inflation. It really is 6 or one half dozen the other. And at the end of the day, it truly is synthetic make-believe, smoke and mirrors, unicorn fart dust, however you want to say it, slice it or dice it, it doesn't matter. Okay. I will continue. Right. And you know who knows this? If you heard about the BRICS countries, the BRICS countries know. They are calling the bluff of the United States. We've got a massive BRICS meeting coming up later this summer in Russia. Remember Russia? That country that, remember their leader, Vladimir Putin? We were told 2 years ago that he was going crazy, right? Well, that crazy leader of Russia, he just went and met with the crazy leader of North Korea, Kim Jong-un. Remember, isn't it funny? Remember? Okay. All right, hold on. I'm going to ring the cowbell for the basement dwellers. That's for 200 thumbs up. Remember 2 years ago, the mainstream CNN and Fox, all of them, they were all saying, oh, something's wrong with Putin. Look at him. He sits at the end of a table. We think he's sick. We think maybe he's going crazy. We're not sure. They did the same thing about Kim Jong-un. Remember, it was like 4 years ago. They were like, oh, we think he's dying. We haven't seen him for 3 months. We think he's going crazy. Well, the crazy leader of Russia just went and met with the crazy leader of North Korea, and they came up with a crazy treaty, an agreement to make their relationship even closer and stronger. Okay, and then that crazy leader of Russia, he went to Vietnam and met with them, and they signed some big agreements. Right? All kinds of agreements. So as we look at what's going on out there, right? These BRICS countries and the crazy people in China bad, right? Yeah. Well, they're doing, I mean, they're all waiting. They all know what's going on with the US dollar. They know what's going on with the US debt and deficit, and it's not a good thing. We're going to have stagflation. I won't go down that path with you because we've talked about that too many times, but man, oh man, are we going to have a stagflationary environment? Okay. On top of that, we got big problems in Japan, and we're going to talk about this derivatives mess here in a second. Big news in the silver and gold arena. And big, hold on. Where'd it go? Oh no, I lost my notes. Oh, well. We can do it off the cuff. That's why it's a live stream, guys, right? But big news out of Japan that could send serious shockwaves throughout the financial sector, right? Derivative oriented stuff that's going on right now. All right, hold on here. All right. Yeah, here, let me pull this one up for you quickly. And this shows you just what is happening. BRICS, another country announces plans to ditch the US dollar, right? As the BRICS bloc continues to embrace de-dollarization on a global scale, why is that important to you as a silver and gold? Oh, de-dollarization, it's just a term, right? No. This is happening on a global scale right now. People are selling the dollar. They're selling U.S. treasuries. It's not like some immediate, oh, tomorrow we're going to wake up and everybody's going to ship all that. No, it's a process, but it's absolutely going on. Goldman Sachs talks about it. JP Morgan's talked about it. Everybody's, even the Treasury departments talked about it. The Feds talked about it. This is happening right now. The dollar is losing its dominant status, hegemony status in the world, right? It's still the world reserve currency, but as more and more, right? What about the petrodollar? We know that whole big story. As the world needs the dollar less and less, guys, that they ship those dollars back. That means there's more and more of a supply of dollars. Whenever there's an oversupply of anything, right? I don't care if you're talking about eggs at the grocery store, milk, meat, oil, anything, silver, gold, or dollars. If there's an oversupply of anything, the price drops. That's the way. And at the end of the day, the dollar cannot avoid the free market forces that will control it. And when the value of the dollar drops, the value of your silver and gold will go up. Okay. Yet another country has announced plans to ditch the U.S. dollar. Vietnam is the latest nation to abandon the greenback for international trade after a recent agreement with the Economic Alliance's 2024 chair, Russia. Okay, here, look. Russia President Vladimir Putin left his crazy house and visited Vietnam this week and signed a dozen agreements with the country's government. I thought the ruble was rubble. I thought that Russia was done, right? Among those agreements is an initiative to settle bilateral trade dealings in local currencies. That means they don't need dollars. That means those dollars come back to the United States of America. That means an oversupply of dollars. That means the dollar goes down in value. The visit is one of many that Putin has made this week, following his recent landmark trip to North Korea for the first time in more than 12 years. This is happening, guys, right in front of our very eyes, right? Look, think about this. The amount of spending, I want you to just consider this. The amount of deficit spending that the United States government is doing right now, like you and I, we're live, we're in the basement, and I'm so glad you're here. Thank you. I'm going to beg one time, and there's my stitches. Don't try to fix your washing machine by yourself. Please give this a thumbs up. Please subscribe to the channel if you haven't already. And don't forget, go check out CoinShop Chris and his new channel as well. There's a link to that in the description. But guys, this situation that we're living through right now is like nothing that we've really ever been through in recent history. Okay. It's happening right now, right before our very eyes. The amount of spending, deficit spending, the overspending that our government is doing. There was an article here. Let's just look at the spending. I had to write it down so I don't forget. That's what you get for being live with Ron. And I got a new wrinkle in this derivative blow up. Are they telling us there's a financial crisis coming that we're gonna wrap up on that point? And this is big, hot news. Okay. But here, let's go out real quick. Let's go for a trip on the internet together. Here we go, basement dwellers. And let's go here. Oh, shoot. Bear with me. All right. Go to Gmail. And we'll go to, where is it? Here we go. This article from Fortune. Hopefully it'll won't put up a thing. Jamie Dimon believes, okay, he's the CEO of JP Morgan Chase. Oh, shoot. See, it did it. Hold on. Here we go. Here we are. Jamie Dimon believes U.S. public debt is the, quote, most predictable crisis the economy faces. And yet, in just 3 months, America has added $2.1 trillion to its tab. Right now, as you and I are meeting here in the basement, okay, people think, oh, it doesn't, we are living through some major changes. Okay. I know, right? Anytime there's been major change, a lot of the people don't understand that it's really going on. The amount of deficit spending that our government's doing, the amount of debt that our government has only been matched in history during times of world war or depression. Are we in a world war? Ask yourself that question. Okay, Europe, the Middle East, Asia, situations there. Are we in a depression? Right? And I heard somebody say this the other day, and how do you feel about this? But and it resonated with me. It said, yes, if you're a part of the middle class, if you're a part of the working class in the United States, it sure the heck feels like you're in a depression. You're struggling to put food on the table. You're struggling to put clothes on your kids. You're struggling, right? Just to make ends meet. We know the statistics. 60% of people can't afford a $500 emergency expense or whatever the case is. So this is going on right now. It's getting very ugly. Now let's talk about big breaking news. To me, it was breaking news, and I know you guys were keenly interested in this as well. But on Friday, I'm going to pull this up quickly because there's a new wrinkle in this story. Oh, wrong one. Where'd I go? Here we go. On Friday, CNBC broke a story about regulators, right? The FDIC, the Federal Reserve, hit Citigroup and JP Morgan Chase, Goldman Sachs, and Bank of America. Aren't those like four of the biggest or bigger banks in this country? Definitely the bigger, and definitely for the banking regulators on Friday disclosed they found weakness in their resolution plans. Basically, the FDIC and the Federal Reserve came out and said, hey, we've got big problems with these four big banks and how they would unwind their derivatives portfolio in the event of economic stress. Think about this. Why did they put that out on a Friday afternoon? And we got a new wrinkle to talk about in this one. Okay, guys, why did they put that out on a Friday afternoon? And do they see something coming? Right? You know how big this derivatives market is. Some people say it's as high as a quadrillion, like 1,000 trillion. Some people say 3-4 quadrillion, and let me 1,000 trillion. Okay. And 1 trillion is 1,000 million. I mean, it's mind boggling. And the banks have no idea. Nobody really knows for sure what the value of the derivatives are that are out there. Warren Buffett calls them financial weapons of mass destruction and everything else. But think about this. Okay. I found my notes. Think about this. On top of that, we've got this big news that came out late last week and through about a bank in Japan, a big bank, an 800 billion. Well, anyway, big bank, Norinchukin Bank. Let's look up. I want to make sure I get that right. Is it 800 billion or 800 million? Hold on one second. Norinchukin Bank. Well, about the Norinchukin Bank. Well, they sent out a big, yeah, it must be 800 billion. All right, hold on here, guys. I'm back. So 800 billion. I've $800 billion bank. Okay. They put out a big alert last week that they have to sell $63 billion worth of their treasuries. They're in the same situation like Silicon Valley Bank and when we had our banking crisis here in the United States. They also are all these derivatives, right, that the Fed and the FDIC warned about, with the four big U.S. banks not being able to effectively unwind their derivatives portfolios. They're absolutely involved in that market as well. And this bank is sending out a warning sign like we are in trouble. A third super chat from Metal Seer. Oh my gosh, Metal Seer, you're being too much. You're being too generous. Thank you, Metal Seer. Wow. Hold on a second here. Let's pull him up. There he is, Metal Seer. You're going to join us for the rest of the live stream. Is there something big about to happen? That would be my question, right? Why on Friday does the Fed and the FDIC put out this news release that, oh, we are chastising the four biggest banks, JP Morgan, Goldman Sachs, Bank of America, that they don't know what they're doing regarding their derivatives. They don't even know how many derivatives they have. I searched and searched. I spent hours yesterday trying to figure out what's the size of the derivatives market. Nobody really knows. We know what Warren Buffett said, right? These are financial instruments of mass destruction. They're like nuclear bombs, right? They're bets on bets, okay? Right? We know that that's going on. Does this have something to do with this Japanese bank that's maybe, possibly going to be going belly up? They have to sell 63. All right, a few more lights, guy. Thumbs up, and we'll do the gong, even with my hands stitched together. Is that what's going on? Is there something big about to happen? I'm just throwing it out there, okay? I mean, but is this a situation where we're going to look back in 3 or 4 weeks or 3 or 4 months and say, oh, now we know why the Fed and the FDIC put out this big warning? Because if the derivatives market blows up, Katie bar the door. Okay, Katie bar the door. I did some calculations with Pat Holland from the Missouri Freedom Initiative. I don't know, it was like 9 weeks ago, where we saw that, like, based on what you estimate the size of the derivatives market to be, it's like if you take 1%, just 1% of that derivatives market. Let me show you this, right? Always our favorite. Thanks again, Metal Seer. Hold on. It wouldn't be a live stream if we didn't look at this, guys, because this is our calling card. Exter's Pyramid, which was developed by a New York Federal Reserve official, okay, who died not too long ago. And he was a big proponent of gold and silver. If just 1% of this, and don't forget, down there on the bottom, gold and silver, those are the only real things on this upside down pyramid. Everything else that rests on it is synthetic, man-made, unicorn fart dust, okay? And then when you get up here to the derivatives, well, those are bets on a lot of this other stuff down here we talked about yesterday. While this is real, okay, you can't see my cursor, I don't think. Look at the gold and silver. That's real, right? Go ahead. You can touch your silver. You can touch your gold right now. Everything above the gold and silver is synthetic, unicorn fart dust, right? But if you get up to the very top, the derivatives, which are bigger than everything, those are based on everything below it, right? Those are based on bank money, all the other stuff that's going. The derivatives are like double unicorn fart dust. And if just 1%, gong. Okay, thank you. Thank you, Susie. I'll ring the gong in 1 second. If just 1% of that derivative money were to flow into the silver and gold market, it would be like 3x the amount of money in gold. It would be crazy, guys. It would be absolutely crazy. Now, this is one of my favorite things to do with you, right? Basement dwellers, is to ring the gong. We got 300 of these suckers. Thumbs up, okay? I'm going to get the gong. You wait right there. The golden gong. And let's all think happy thoughts about silver and gold over the next 6 months as I ring this thing. It definitely resonates as I hit it, right? If we look back at the one more thing I want to mention to you, when we look at the U.S. economy and the world economy, we've got more zombie companies than any other time. You aren't a zombie. You're a basement dweller. 600 people joining us on a Sunday morning. How awesome. Okay. I hope for you that you're nice to yourself today. I'm telling you, to the extent that we can be nice to ourselves, it helps us be even more marginally, incrementally nice to other people. It's a big deal that you join us. Okay. Susie and I, thank you. Thanks to our sponsors, right? Pimbex. You can check them out at pimbex.com, First Mining Gold, firstmininggold.com, and Fortuna Mining. New website, new name, same great company. Thanks a lot, guys, and I'll see you soon.